Hi, Assalamualaikum. We are from Group 8 going to present about guideline of SUKUK. So, let's go.
Yeah.
Introduction. SUKUK is the plural of the Arabic word sak, which could mean financial instrument, legal deed or check. Definition of SUKUK as per AAO-IFI is as follows. Certificate of equal value representing undivided share in ownership of tangible asset, unused funds and services, or in the ownership of the asset of the particular project or special investment activity. For the objective of SUKUK, Islamic bonds or SUKUK are financial securities that comply to Sharia or Islamic law. SUKUK's main goal is to give investors a chance to invest their money in accordance with Islamic principles, which forbid charging or paying interest, which is riba, and taking part in business or activities that are deemed destructive to society.
Next, I will continue with the main types of sukuk. The first one is murabahah sukuk. Murabahah sukuk is a sale contract where the cost of the asset and the profit realized by the seller are disclosed to the buyers. For examples, the seller sells an asset to the buyers at a cost plus a profit margin. The buyers then sell the asset back to the seller at a later date for the original price plus a profit, which is paid in installment. Next, ijarah sukuk is the type of sukuk based on a contract, which is a type of lease transaction. In an ijarah sukuk, the seller sells an asset to the buyers, who then lease it back to the seller for a fixed rental payment. At the end of the lease period, the seller can either buy the asset back or extend the lease. Musyarakah sukuk is a partnership contract where two or more parties co-fund a specific Sharia compliant project or asset with the goal of generating profit. In a musyarakah sukuk, both parties provide capital to a finance project, share profit or loss, and jointly own the underlying asset. Next, mudarabah sukuk is a type of partnership arrangement where one party or more provides the funds and the other party, managing partner, provides expertise in deploying the fund in a Sharia compliant project or business activity for profit generation purpose. The profit from the project are shared between the seller and the manager according to a predetermined ratio. Wakalah sukuk is an agency contract, which is a type of agency agreement. In a wakalah sukuk, the seller appoints an agent to manage the asset of the sukuk. The agent is paid a fee, which is deducted from the profit generated by the asset. Istisnat sukuk is a sale contract, which is a type of contract of the sale of goods that have yet to be manufactured or constructed. In an istinat sukuk, the seller sells a project or an asset that is yet to be built to the investor. The investor pays for the project in installment, and the seller uses the fund to build the project and deliver on an agreed future date. Istisnat is typically used in the Islamic finance industry to finance manufacturing or developing assets such as properties, airplanes, and machines. Salam sukuk is a sale contract involving spot payment of the full sale price and deferred delivery of the subject matters. Salam is typically used in the Islamic finance industry to facilitate financing agricultural produce and extraction or production of natural resources. The last one is hybrid sukuk is a term used in the Islamic finance industry to refer the innovative sukuk structure that employ multiple Sharia compliant contracts. For example, a hybrid sukuk could combine the structure of a murabahah sukuk and an ijarah sukuk to finance a project that involves both the sale and lease of assets.
Next is the principle of sukuk. Firstly, is a halal investment, where sukuk provide an investment opportunity that complies with Islamic principle. In addition to being asset-backed, sukuk is backed by tangible assets such as property, equipment, or infrastructure. The next principle is a non-interest based. Sukuk is structured to avoid the payment or receipt of interest that conflict with Islamic law. Instead, the income generated by the underlying asset is shared among sukuk holders. The last is risk sharing, where sukuk involves the sharing of a risk and return between issuer and investor who are exposed to the risk of the underlying asset. Next is the difference between sukuk and conventional bond. The first is that sukuk involve ownership of asset while bonds are debt and transaction. Besides, if the price of the base backing the sukuk increase, then the investor monthly profit also increase while the bond interest rate profit is fixed. In addition, asset supporting sukuk must be Sharia compliant, while bond issues is likely to involve interest rate and is not Sharia compliant. Lastly is Sukuk valuation are based on the value of their underlying asset while bond price are largely determined by credit rating.
Next is benefits of Sukuk. Firstly, diversification. Sukuk, also known as Islamic bonds, can offer investors a unique investment opportunity by providing exposure to a wide range of sectors and industries. Sukuk issuers may come from various industries such as infrastructure, energy, real estate, and transportation. This variety of sectors and industries can allow investors to diversify their portfolio and mitigate risk by investing in different asset classes. Next is transparency. Sukuk issuers are required to provide a higher level of disclosure than traditional bond issuers, which can help investors to make informed investment decisions and assess the risk and potential returns of the investment. This disclosure is essential because Sukuk are based on tangible assets, and investors must have a clear understanding of the underlying assets value and performance. Sukuk issuers must disclose detailed information about the underlying asset, including its location, condition, and revenue generating potential. This information provides investors with greater visibility into the asset's performance and helps them assess the risk associated with the investment. Thirdly, liquidity. Sukuk are tradable on the secondary market, which means that investors can buy and sell their holdings as needed. This feature offers greater liquidity compared to traditional investments in real estate or infrastructure projects, which are often illiquid and require a long-term commitment. Lastly, socially responsible investing. One of the key features of Sukuk is that they are often used to finance socially responsible projects. This includes infrastructure development, affordable housing, and renewable energy, among others. These types of projects are often seen as beneficial to society and the environment, and align with the principles of Islamic finance, which emphasize the importance of social justice and ethical conduct. Thank you.
There are several main features of Sukuk. First, Sukuk requires a basic asset for its issue value. This asset becomes the basis for issue Sukuk because Sukuk is based on the Islamic economic system. Second, Sukuk is proof of tangible asset ownership or beneficial ownership. Underlying asset can be tangible assets such as land and buildings, and intangible assets such as services or beneficial right over assets. Third, Sukuk is that the use of the proceeds must comply with Sharia principles. It must be free from riba, roro, and maisi. This is an example of Murabahah Sukuk issuances in Malaysia, which is Sukuk Prihatin, where it is a national economic recovery plan implemented in 2020. This Sukuk issuances is a Sharia-compliant instrument based on tawarruk through Murabahah Sukuk arrangement. This Sukuk can be accessed digitally and it can be subscribed through Jompay or Duit Now through 27 bank in Malaysia, and Maybank is the main distributor of this Sukuk. Profit in this Sukuk will be paid quarterly and are tax exempt.
Sukuk in the global market. Market profile. There were 123.9 billion Sukuk issued in third quarter 2022 and 79% were investment grade. Global accumulated Sukuk rose 2.1%. In the GCC core markets of Malaysia, Indonesia, Turkey and Pakistan, issued Sukuk fell 14.4%, similarly bonds issuance fell 14.1%. Sukuk held 29.5% of the core market funding mix in 2021, up from 28.4% in 2022. As of third quarter 2022, ESG-related Sukuk rose 2.8%. Sukuk default below 0.3%. In terms of sovereign focus, high oil prices are expected to cause the GCC countries to record a surplus in 2022. In addition, substantial financing is required to fulfill the GCC strategy. Sukuk is common in Saudi Arabia. Neither the UAE nor Bahrain issued Sukuk in third quarter 2022. Expensive financing due to rising interest rate. On the other hand, oil imported governments will continue to need financing. Turkey, Indonesia, and Pakistan issued second US dollar Sukuk in October. Funds may also be raised domestically by Sukuk issuers that are not pegged to the dollar. Most Sukuk are marketed in local currency, which is 91.6%. Looking at liquidity management, Pakistan, Malaysia, Indonesia, Bahrain, Qatar, and Turkey issued short-term Sukuk. Through excess liquidity of Islamic banks, the government can control monetary policy. The supply of Sukuk generally exceeds demand, and some are not tradable. There are no short-term government Sukuk in developing markets such as Oman, Jordan, Nigeria, and Egypt. Unlike conventional banks, Islamic banks cannot invest in T-bill. According to survey results, pipeline and Sukuk momentum is increasing. Sukuk activity will generally remain subdued in core markets such as bond. $75 oil prices, high interest rate, geopolitical event, and lower appetite for emerging market debts may affect Sukuk market volatility in the 2022 until 2023 period. Demand for Sukuk will remain intact, driven by the increased liquidity of Islamic banks. Demand for Sukuk will continue to be driven by funding diversification plans and debt maturity in various sectors.
Risk of Sukuk. First, foreign exchange risk. Sukuk denominated in foreign currencies are exposed to currency risk arising from unfavorable fluctuation. For example, US dollar denominated sukuk held by Malaysian investor will expose the investor to currency risk if the dollar depreciates against the Malaysian ringgit. Therefore, investor will find the real income in terms of a contraction of the Malaysian ringgit if there is an adverse movement in the exchange rate. Sukuk originator can avoid the risk by using multiple currencies in their issues. Liquidity risk. Sukuk structure is exposed to liquidity risk because currently there is no secondary market that will structure the liquid amount. For example, only Malaysia, UAE and Bahrain have a secondary market locally for sukuk trading, but it is not the case in the rest of the cases. Sukuk is at a loss due to the absence of its secondary market. This all adds to the liquidity problem and most investors need to hold the sukuk certificate until maturity. However, there is a possibility to reduce the risk of asset loss by using provision for insurance claim in the form of takaful. Sharia compliant risk. Sharia compliant risk is specific to Islamic instrument and it refers to the risk of loss in sukuk value due to non-compliance with Sharia principles. The consequences of issue non-Sharia compliant financial instrument can be very damaging to the issue reputation and may require intensive effort to regain investor confidence. The Sharia board should be active during all stages of sukuk operation, ensuring Sharia compliance throughout the life of the sukuk.
Sukuk are Islamic financial instruments that are similar to the bond, but operate in compliance with Islamic law or Sharia. They represent ownership in an underlying asset, such as property or equipment, rather than done. Sukuk investors receive a share of the profit generated by underlying asset rather than interest payment. Sukuk can be issued by government, corporation, or other entities to raise capital for project or investments. The market of sukuk has grown rapidly in recent years, particularly in Muslim majority countries and regions. There are several reasons why investors should consider sukuk as a viable investment option. Sukuk can provide investors with a unique opportunity to diversify their portfolio, generate steady returns, invest ethically, tap into emerging market, and benefit from government support. Diversification. Sukuk provide an opportunity for investors to diversify their portfolio beyond traditional bond and equities. Sukuk offer exposure to different asset classes, including real estate, infrastructure, and energy, which can help reduce overall portfolio risk. How about steady returns? Sukuk offers steady returns through profit sharing, making them attractive to investors seeking a predictable income stream. In addition, Sukuk can offer higher returns than conventional bonds, particularly in emerging markets. Third, ethical investment. Sukuk are structured to comply with Islamic law, which prohibits interest-based transactions and promotes ethical investing. This makes Sukuk an attractive investment option for socially responsible investors. And government support. Many governments are actively promoting the issuance of sukuk as a means of raising capital for infrastructure development. This has resulted in a growing number of sukuk issuances, providing investors with a range of investment options. So, if you want to know about sukuk more than this, you can follow any of the webs that explain about sukuk. That's all from us. Thank you.